Hello and welcome to the look ahead for Wednesday, the 18th of September, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, looking at the economic calendar, tomorrow we've got Eurozone inflation data. This is the secondary reading, so it's not usually as market moving as the preliminary reading. We've also got UK inflation figures, and finally, the Federal Reserve interest rate decision. So this is the decision that we've been waiting for what feels like an eternity. It's where the Federal Reserve is expected to begin its rate cutting cycle. The big question is by how much? Will the Fed be cutting rates by 25 basis points or go for an outsized 50 basis point cut to get the ball rolling? The markets are more convinced that the Fed will go for the larger rate cut, with the market pricing in around a 63% probability of that 50 basis point rate cut. Data has been mixed. I think it's fair to say that the Fed will struggle to make a decision here, in the sense that there is sort of, signs that the US economy is cooling in the labor market. We obviously had that July non-farm payroll report, which was really quite weak. But then we also had some weakness in the August payroll report. We've also seen weakness in other areas of the labor market. But then we've seen that core inflation, for example, was a little bit hotter than expected. We saw retail sales today from the US, which were a little bit stronger than expected, although down from the previous month. So there is a lot for the Fed to weigh up. I think whatever happens, the market will react with volatility. We will likely see increased volatility given the uncertainty surrounding the pricing. But let's just take a look here at the Dow Jones. Dow Jones is trading at an all-time high as we look ahead to tomorrow's data, tomorrow's Fed rate decision. I think the prospect that the idea that the Fed is starting a rate cutting cycle is what has been spurring the indices higher. But I think it's also going to be pretty key that the markets come away with a sense that the Fed is still planning for that soft landing and looking for that soft landing and heading towards a soft landing. Without that, and if we do get a larger size rate cut, then there is the possibility that the market could get spooked and sort of be a bit concerned that the Fed is behind the curve, and if they don't act big, then there could be a hard landing. So I think there's quite a lot that the Fed will need to navigate tomorrow if it does cut rates by the 50 basis points. But just broadly speaking, we've seen this upward trend continue in US stocks on the prospect that the Federal Reserve is now entering an easing cycle. So if we just have a look, yes, as I said, Dow Jones, it's trading at an all-time high. It trades within that rising channel. It's broken above the previous all-time high that was set at the end of August at 41.5, just under 41,600. Now trading at around 41,730. Potentially we could see gains really up until the 42,000 level, even 42,250, which would be the upper band of that rising channel. As far as support is concerned, obviously there's an immediate support there at that previous all-time high. But apart from that, there isn't too much going on until we get, obviously there's the midpoint there at around the 40,850. But really, key support below is seen at 40,000, and a break below there could create a lower low and change the structure of this market. So that's the Dow Jones. If we also just have a look at what's going on in sterling US dollar, as I said, we do have the UK inflation data as well. Now, UK inflation is expected to show that inflation held steady at 2.2% in August. That's in line with July. A lot of focus will be on service sector inflation, which may tick higher. Now it's still above that 5% level. That's the level that sort of the inflation area that the Bank of England's going to be looking at. They're feeling a little bit uneasy about still is sticky service sector inflation, which is intrinsically linked to strong wage growth. So the Bank of England are going to be wanting to see that when they meet on Thursday. They're going to want to see that inflation in the service sector is cooling. Now, if we just have a look here, what's going on in this chart, again, this is the pound US dollar. The sterling has been benefiting from US dollar weakness that we've been seeing on those sort of rising Federal Reserve rate cut expectations. So the Bank of England's already cut interest rates once by 25 basis points, not expected to cut again until November, and they're not expected to cut as much as the Fed this year. The market's pricing in around 100 basis points worth of cuts from the Fed this year. For the Bank of England, it's actually not that much at all. In fact, we're looking at, I think it's around one more rate cut this year, not quite two. So around 43 basis points worth of cuts. So that's going to naturally lend strength to the pound over the US dollar. Obviously, it depends what happens tomorrow as far as the Fed is concerned as well. But buyers, if we get some pound strength, if we get sort of stronger than expected UK inflation data, then the level to be watching out for at the moment is this high here, which is the 132.65. That's the 2024 high. The market will want to break above that, and that's also the upper band of that rising channel. That will move above there will create a higher high. If we get weaker inflation, especially a weaker service sector inflation, which could see the market reprice for Bank of England rate cut expectations and ramp them up a little bit, then on the downside, be watching out here for 131.40. That's the high that we saw in July 2023. Then below there isn't really too much in the way of support until the 130 level. So just having a look at gold, because I think when we're talking about the Fed rate cuts, gold is always a good one to be watching out for as well. Obviously, gold rose to an all-time high of 25.89 yesterday, has just eased away from that all-time high. But do you know what? It's still trading above this sort of in this rising channel, rising trend line here. It's trading above well above the 200 SMA. As far as support is concerned, then the nearest support here is 25.33, and then below that this 24.80, which is a more serious support. That's also the the rising trend line support as well. But I think there's no reason to think that we might not get more upside, particularly over the more medium term here. We might find a little bit of resistance here around the 2600 level. This is part of a trend line which dates back to 2022. So I hope you liked everything that you have seen, and if you do, then please do give this video a like, and if you would like to receive more videos like this, then please do subscribe.